opportunities still knocking on these trades. I'm going to show you how you could have found out about these ahead of time and for free. Welcome to Sunday Night Charts, where we take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre. Thanks for joining me. Moving averages: 21 days red, 50 days green, 100 days blue, 200 days tan. These are the colors on your screen. Price versus momentum. Price is a general direction prices are headed. Momentum is a rate of change, a bullish indicator for both as positive and bearish indicator for both as negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level sellers can't break, and support is the level sellers can't break, or resistance is where sellers are at, support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time of trade, and provide direction of the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. Symbol SPY shook off all its negativity on those moving average. Remember, they were underneath the 100, all 100 across the board, underneath the 100-day moving average going into the start of last week. And now what do we see? Nothing but mostly green. Let's go over to the chart, and we're going to identify some changes here and show you how you could have known about this ahead of time and some other trades. So you can see volume support providing this red bar where there's a major level of volume trading provides support. So now we know that this zone is flipping from a sell zone, which was driving prices down here, indicating this is now a buy zone, which suggests to me that S&P 500 should continue to make new all-time highs and move up from here. Now, how would you have known about that? Could you have known about that? Well, Momentum Time Report Pro, which is an open beta of my formula-based momentum strategy, is free, and it said you can, 4 days ago, it flipped from a brief sell signal, that would have been the Friday, and went back to buy, giving you some indication that you could do this. Do sign up. Link is in the description below. You'll get your first issues Monday morning. Again, right now, this is an open beta, totally free to you. Let's go on to the next symbol. What do we have lined up is the NASDAQ. And what do we see in the NASDAQ? Momentum flipping bearish on the 21-day moving average. 50-day remains bearish. 100-day remains bearish, but a cleanup of the moving averages as well. So only just momentum is showing a slowdown. Is that a danger for the NASDAQ? Well, let's check out the cues here and see what's going on. And the answer is it doesn't appear to be that momentum is a problem. Found support, again, just like the S&P, flipping this sell zone into a buy zone. Tells me, at least looking from this, that we're looking. The NASDAQ is looking for its next supply zone. And for price that's bullish, I would be ignoring momentum here. You got major volume support well below here in 316. So where the only question now is where is the supply zone? Unless this is the beginning of it, would tell you also higher technology stock prices to come. How about small caps? Remember, small caps lead the large caps, so where they're headed is important. And then too, shut off its negativity and leaving the price of momentum signals the same, shutting off those red moving average signals, all going back green. And now let's check out where we're at with IWM, and it's still showing that it's stuck in this sell zone. Now, if you believe the large caps are leaders here, then the small caps are going to break out and follow probably this week. If you're uncertain about that, then you want to wait and let this resolve, let this break higher and move out before you get into it. Otherwise, you see volume support right in the middle of the two supply zones. To talk about a no trade land. You can't, buyers and sellers can't get through either side, but at the moment this is in the buyer's hands. If it's following the large caps higher, that should indeed break out, so keep an eye on that. If it rolls over and heads lower, then that is a sign of trouble for the large caps. How about the energy sector? Now all green again. Everything is shutting off its negativity from last week, including the energy sector. Let's go take a look at the chart on XLE, because what did we say last week? That it was just tapping its 50-day moving average, and it did. It tapped on that. It bounced where that volume support line over the last 6 months is now acting as a massive level of support, coming back into resistance here. So the energy sector hasn't been able to get through this overhead resistance, where, again, what triggers that relationship is you have people, if you go back, that were buyers at this level. Prices broke through. Now they're upside down, and what are they looking to do? Sell at that level. So once those sellers are flushed out, then prices will be able to go higher. The only question is how many of them are left. But no slowdown in crude oil prices, bouncing off $62 and just taking off from there. As again, the market telling the economy that a boom time is coming. You better get ready to pay higher prices at the pump because, well, we're going to make sure that you do because we think you can afford it. So the only question for energy stocks now is, can it fall crude oil prices higher? Well, the answer remains is how many of those sellers are still left, but we should expect to see that follow energy prices up. How about financials? Well, the banks now getting the green light to buy their stock back or buy more of it back. That should be bullish for financials that are already at nosebleed levels. Price flipping bearish on the 21-day moving average, but momentum going bullish on the 21 and 50. We're starting to see some cleanup in the moving averages that were previously red, remains below the 21 and 50-day moving average. One momentum remains red, and again, you wouldn't think that would stay that way with the banks being able now to buy their stock back at will and expected to make major announcements in the weeks that come. And right now you can see the 21-day moving average is acting as a bit of overhead resistance as it curls and rolls over. There's quite a bit of volume here indicating that sellers were here. You have to know that the banks knew they were going to pass these stress tests. So this remains a sell zone. Price is just reconfirming it. The buy zone remains below with volume support sitting at 34.16. So at the moment, this is a sell zone. But if you believe in share buybacks, that shouldn't be an issue for the banks that are going to unleash some of their buying power here soon. How about industrials? Industrials lead the large caps as well, so you got to keep an eye on those. 21-day price remains bearish, but momentum flipped back bullish, now breaking above the 9-day moving average, but the more critical 21 and 50-day moving average remains red along with the 1-month momentum. Let's see what's going on with XLI. And it's showing a topping pattern clearly here now, as you see, under the 50-day, under the 21-day. Volume support is volume resistance in this chart. You can see that at 102. This is not a positive sign for the broad equity market. Remember, industrials also lead the large caps lower. So when you see the industrials start to top and roll over, watch out. Whatever string is left on those kites for the large caps to go higher, it's not much. So watch the industrials, watch the small caps, giving you some indication there. How about utility sector? Price goes bearish on the 21 and 50. Momentum now also bearish on the 50. These are two signs I don't want to see if I'm bullish on something. And now below all the major moving averages across the 100-day. Still 1 month momentum is negative and falling. Let's take a look at utilities and see that it just couldn't. Remember, this is that bull flag that everyone was hoping for. Didn't get it resolved down, is now sitting at support right above where it should be. This should be bullish for price. So I would expect to see utilities kind of at least make a run back up here into the $65 range. There's quite a bit of support here to say there's no reason this should not hold. So look for utilities to go higher and see if it can't get back some of those losses from last week. On to gold miners. Now, this is not a chart you want to see if you're bullish on inflation, bullish on the metals, because remember, mining stocks lead the metals. So price, momentum now bearish across the board under all the major moving averages through 100-day, 1, 6, 9, 12-month momentum is negative. That's not what you're looking for unless you're looking for a bottom, because remember, when this thing starts going red, a bottom's not far off. 3-month momentum is positive and rising, but that's the only thing for gold miners. And if you were on the Momentum Timer Pro list, which again is free, next issue goes out Monday, well, you would have started to see some sell signals as of last week on GDX and GDXJ. Starting on 6/16, you've seen this string of sell signals start to build. And let's take a look at what that chart has to say, because it can't be pretty. So let's see what happened here. Wow, look at that. GDX blasted through support here at 36. I mean, just drove right through it, hit into this volume support, and now volume support is acting as volume resistance as price stays below this. What that tells you, the path of least resistance right now is to the next level of support which is sitting here at 33.50. Failure there would open up a retest of, say, the support at 31. Also not good news for the market, because when gold mine stocks roll over and start to head lower, that puts the big caps kind of on notice. Doesn't mean they can't still rally, but it just means that rally is going to get a lot more difficult going forward. Let's take a look at the next one now. So not a lot of good signs there for GDX underneath all of its moving averages. Don't like that at all. How about emerging markets that tend to follow the gold miners? So you got a nice clean setup here above the moving average. Momentum's positive. Price bullish through the 50-day. Momentum haven't been a problem with some of the large caps. Let's see what's going on with EEM. If there's any dangers in the charts here. And what do we see? Volume support. All that volume sitting at 54.23 acted as support. Bam, right back into a sell zone. So clearly there are buyers for emerging markets, and no limit to them being in this level below 54, and the sellers right above that in the $50.5 range. So ball's now back into the sellers' hands. Buyers want to take that higher. Sellers need to break the buyers. Gold mine stocks telling us that emerging market stocks are probably on notice to go lower. Again, not familiar with these relationships, chart the two together and you'll see. All right, on to high yield bonds. No stress in the high yield bond market, although investors will one day find out why they're called junk bonds if they don't know. Price remains bullish through 100-day. Momentum still holds bearish on the 50-day. Not a big deal. Everything else green and pretty, looking good for high yield bonds. Not something I get excited about, even though as a bond king, these things are dangerous. They look good until they don't, and when they don't, they really don't. But buyers are having no problem buying junk, no problem buying it at ultra low yields with now volume support. Remember, this was kind of acting as resistance. We knew the sellers were always above here in the 87 range. Well, I guess those sellers are dried up because buyers can't get enough junk, and so that's bullish. This is validating they move higher in equity in the large caps. So there's, market's a bit opposed. Small caps, financials, gold not jiving with these higher large cap prices and now high yield bond prices. So kind of maybe market going in two directions. Somebody needs to get confirmation with the other party and get back in sync. How about Treasury bonds getting hit pretty hard going into Friday's trading, as the market assumes that all those share buybacks for financials will lead to the banks dumping bonds, but no evidence of that so far. Momentum turned bearish on the 21-day moving average, remained the same on the other signals, now below the 9-day moving average, and the other change is a 12-month rate of change went to negative and falling, although again at bottoms this thing will bounce all over the place. Overall still constructive. Let's take a look at the TLT chart, because if you are on the Momentum Timer Pro list, which again is totally free, you would have found that going back, where is it? Here we have TLT. Picked up a buy signal 24 trading days ago, 21's a month. So 1 month ago, you would have gotten some notice that these signals were going to buy signals, and that is indeed bullish. The more of those buy signals you see stacking up in Momentum Timer Pro, well, the better the signal is, and it's telling you that there's a major bottom here going on in bonds. We've seen it over the 3-month window here. It has bottomed out and going higher. It's above its 50-day, above its 21-day, found support on its 21-day, and all it needs to do is break this 145.50 price range, and you can see there's no volume support. There's no volume to act as resistance between 145 and 152, and not much after that. So right now the sellers are in charge trying to drive this lower, and they've got the Fed trying to buy prices up. So they've got a headwind. But I want you to go back and look at the chart here. You can see it got rejected at 145 before the big breakout going into 2021. Got rejected right to the same level we closed at here on Friday, rejected down to there, made a second run at 145, so gap up and run up to there, rejected, and now following the 21-day moving average, and that is it, breaks up there higher. Again, you would have known this 24 trading days ago. We had this on Momentum Timer Pro. free to sign up. Just link in the description below. And you're seeing a bottom here in a very similar style to what happened in 2021 before prices shot up to 172. There's your big opportunity. I told you, opportunity is knocking in this report. Are you listening? That is a question. It's there. You can see it. Momentum Timer Pro told you it's validating this. How about we move on to gold? Not a pretty picture here. Price, the only thing remaining bullish on the 50-day moving average, now below all the major moving averages through 100-day, and only 3-month momentum is positive and rising. Not what you want to see if you're, again, bullish on the inflation trade. If you are on a risk-off trade, well, then you're loving this chart because remember, gold miners are a move lower is a risk off, and you can see the gold just puked right through 2 levels of support. Below is a 6-month volume profile now acting as overhead resistance, telling you still the next move for gold is 1750. Failure to hold there, you're down into the low 1700s. A break of the 1670 level is a massive risk off move that says financial conditions are super tight. Keep an eye on gold because the large caps and high yield bonds are saying, no, you're wrong. But gold is a sayer of truth. How about silver? This was supposed to, again, be, you have a lot of small traders trying to drive silver prices higher, big silver squeeze, and completely losing this battle. Now below 921.50 and 100-day moving averages. Momentum on the 100-day negative, bearish as this price. Not much of a picture here that tells you any good things are going on with silver. But let's take a look at silver futures and see it too is now fighting its volume profile line at 26.16, which is at the moment acting as overhead resistance, suggesting that the path of least resistance for silver is down into the sell zone. We learned last week that this buy zone, this is a sell zone up here between 26 and say 27, buy zone between 23 and say 25. So the path of least resistance down to 25. Check to see what Momentum Timer Pro thought about that. If you're curious, again, next issue out on Monday. Last opportunity for you. Remember, there's 2 today. I didn't tell you that in the lead, but there's 2. Opportunity is still knocks for the dollar. Symbol DXY, 21-day moving average bullish. 50 is only bearish on price. Look at this, above the 100-day moving average, and a nice clean signal. Only the 3, 9, and 12-month are negative, but they're rising. This is a positive signal when you start to see. Remember, this was red turning to green. That should have been your signal. Let's see, what did Momentum Timer Pro tell us about the dollar? We're using the UUP because this is all, we don't have futures here, but it gave you a signal 7 trading days ago so a little over a week. You started getting some buy signals to give you an indication that opportunity is knocking on UUP. Let's take a look at the trade weighted dollar, and then we'll look at the volume profile on UUP, and we see what's over its 200-day moving average, over 100-day, over 21-day, over 50-day. So it's looking to retest this 92 level, bearish for equities, should it get through here, break through this 94, and you got to move up to 103. So opportunity knocking for you on the dollar. Volume profile, look at that, it's telling you support now on UUP is at 24.39, and all it's got to do is break this, say, $25 price range, and you got a big move higher. So 2 opportunities for you in today's report. Be sure to sign up for Momentum Timer Pro. Again, as I mentioned, next issue out on Monday. That's the chart show. We'll see you back on Monday for the macro show. I'm Steve Van Metre. Bye now. The content of this video provides education and information only, is not intended to provide investment or other advice. This show is not to be construed as a recommendation or solicitation by selling security, financial instrument, or participate in particular trading strategy. This video was prepared by Steven Van Metre. Personal capacity opinions expressed in the video that are my own and not affect the view of Atlas Financial Advising or Steven Van Metre Financial.